Hello everyone, welcome to the channel. Today we are talking about instant execution or limit orders, which are the best to use or which should you use as a trader. In today's video we are going to break down the meaning of instant execution and limit orders as well, while also talking about their pros and their cons, right? And how to use each others as a smart trader. So without wasting much of the time, if you are interested in this sort of content, please do like, share and subscribe this video. Let's jump into the video. So I already have annotations on my screen about the meaning of instant execution and limit orders, as you can see on my screen. So instant execution simply means that you are entering the trade at the current price. You come to the chart and price is already at your POI, however you trade. So all what you have to do is, you don't have to think, nothing, just carry your phone and execute the trade, right? So that's what we mean by instant execution. While on the other hand, when we talk about limit orders, this means that we are placing an order at a specific price level and waiting for price to come and activate that order. So all of this has their pros and cons. So do well to stay to the end of the video, as we are going to be unraveling some of these things that we do, right? So the pros and cons of instant execution. So let's jump into the pros and cons of instant execution. So when we talk about instant execution, one of the pros of instant execution is that no missed entry. You are not going to miss your entries. No missed entry or no missed opportunity. So these are one of the pros of instant execution. You won't miss your opportunities, you won't miss your entries, because there is no waiting. Once you come, you are executing, right? So these are one of the pros. Another pro, and this is mostly very useful when the market is very, very volatile. When the market is very volatile, sometimes your order might not get activated and the rest, but we'll go into that. So no missed opportunities. Another pros of instant execution is that they are best for momentum moves. Best for momentum moves, I mean price is very, very volatile, like I said. So immediately you execute, either it is going your way and it will just go your way, right? If you are hitting stop loss, you hit it immediately. If it's going your way, it will just start moving in profit immediately. I hope you get. So that's another pro of instant execution. Some other thing is that it is fast. It involves fast, it is fast. It involves you being very, very active on the chart. So because the executions are fast, the market will move very, very fast. Probably because a lot of people that use this instant execution, you will know when to use them, but most times maybe a lot of them use it on the lower time frame, which the candles will be moving very, very extremely fast, right? So fast moves, those are one of the pros of instant execution. And the last one that I want to talk about is that it is useful for confirmations. So useful for confirmations, I mean price, you have to wait for your pattern to form or whatever. So after waiting for all of those things, immediately price is at your POI, you just click the button. So it is useful for confirmations, right? So because you can picture the whole what the market is doing on the higher time frame, then try to move lower to get a nice entry, so those are one of the pros. So useful for confirmation. So the cons of instant execution, let's actually go into the cons. This is where I would draw most of the time, because this is where it is actually practical. So one of the cons of instant execution is that it requires constant chart watching. So it requires constant chart watching, because if you want to like have a calm trading mindset and the rest, most times it works well with limit orders, because then your brain is not taking much brain your brain is not taking much of your brain power to do anything, because like you just place the limit and left. But for instant execution, you have to be watching the chart. Market might come to where you were supposed to enter and then spike and maybe leave you, but might still come back. So you just have to be watching the chart. So it places you on this kind of emotional pattern that you just be looking at fast movement of candles and the rest of them. So those are one of the cons. It requires constant chart watching. Another cons of it is that this is really, really tricky. You start chasing entries. A lot of traders chase entries because of this whole instant execution. The whole pattern that they use. They end up start chasing entries, start over trading, placing trade man, and then like a whole lot of things, all because of all the fast movement that is going on, right? So this is another con. Believe me not, like I'm saying this from an experience, right? So you start chasing entries, right? Another cons so far that I've been able to like notice is slippage, right? Slippage, yeah. So by slippage, I mean how you click buy and the market did not execute that buy at the exact price that you wanted to buy. Like let's say you click a buy at 1,200 and then the market executes your buy at 1,500. So you're already in loss, right? So that's slippage usually happens a lot of times, especially when the market is very, very volatile and you just click your entry like it. So you should be aware of slippage, because you are most likely to get affected by it. Another cons of instant execution that I've been able to come up with is emotional trading. Emotional trading. So by emotional trading, I mean you start entering based on impulse move. Your decisions are clouded by the fast movement of the candles that you are seeing, so therefore leads you to trade emotionally instead of following a structured plan. You start entering trades randomly, start trading, because of you are seeing movement, your brain your brain cannot relax and try to dissect the whole movement. So you start jumping, start chasing entries, start trading anything. Most of the times it also gives a poor risk to reward ratio. Sometimes actually poor risk to reward ratio. So because sometimes you execute, you didn't even plan the trade, you didn't really check what lot size you were supposed to use. The play was basically not, the trade was basically not planned. So you ended up jumping into, you don't even understand where your take profit should be and everything. At that point your brain is just looking for validation, just looking to be active, just looking to do something, which doesn't always end well at the end of the day. So those are one of the cons. And then the last one is over trading risk. Over trading risk. So if you use instant execution most of the times, you are most likely going to overtrade. If you've not built your your trading psychology to a point that if you don't see what you're looking for, you don't trade. If that doesn't happen, you will have more risk of over trading, right? So let's jump into limit orders, right? So limit orders, on this other hand, limit orders are orders that you place at a specific price, So you place them at a specific price and you wait for price to come to your entry and activate it. Like you're basically just watching the market, not reacting. You plan the trade, then you wait. You plan the trade, you've seen where your take profit should be, you've seen where your stop loss should be, you've calculated your lot size and everything. So you actually have time to relax and plan the trade very well and execute. So let's talk about some of the pros. Some of the pros that you have, you get better interest. You get better interest. By getting better interest, since you are waiting for price to come to you, so you basically just enter at a support level, resistance level, whatever strategy you use to trade, but you actually get better interest, right? Because price will, most of the time, sniper, because price will just tap your where you place your limit and either moves in your direction, so you have better interest. Another pro is that you have high risk to reward ratio. Okay, so you have high risk to reward ratio. So this is the second cons of using limit orders. You have high risk to reward ratio because in this scenario, you have already planned the trade. You already know how much you are going to lose if it takes you out. You already know how much you are going to make as well. So everything is planned, right? So the risk to reward ratio is usually high most of the time. But then your psychology too has to be in check to be able to hold your trades and the rest of them. So another cons that I've noticed is that it promotes discipline. Now this applies to most of the newbies, these intruders that are actually coming up. So if you know that you are actually just starting your journey, limit orders will actually help to promote your discipline because you are not overthinking. Your brain is not thinking about a whole lot of things. You are already fixated on what you want to do in the market. So you've seen your entry, you've seen your order block, favorably that wherever you take your entries from, you've planned the trade. So it will promote your discipline, right? So you tend to be disciplined. Less screen time, yeah. Another pro is that it gives you less screen time. So if you are somebody that probably you work in 9 to 5 or you have other things going on with you in the day that you maybe that you don't have the time to be watching the charts most of the time. So limit orders helps with this because you just have to place the limit there and allow the market to do its thing, while you are going about your normal day, So it really helps. So less screen time, very, very vital fact, very, very vital fact. Then another pro is that it reduces emotional trading. It reduces emotional trading. It reduces this in the sense that since you already have your plan mapped out, you already know where your take profit is, you know where your stop loss is and everything. So there's really nothing to really bother yourself about again at the end of the day. Let's say price comes and triggers your entry. There's nothing really bothering you anymore because either stop loss or take profit. So all what you have to do is to wait, allow the market to do its thing. So those are one of the cons. Those are one of the pros. So let's quickly go into the cons of using limit orders. So one of the cons of using limit orders is missed trades. Sorry about that trade. So one of the cons is, missed trades. Most of the time, using limit orders, price can come to your level, tap the level, and then not activate on your MT5. You start thinking, oh, but the trade activated on my trading view. It could be your broker, it could be anything, right? But you should just understand what you are into. If you want to be using limit orders, you should just understand that you are going to miss trades most of the time. Unlike somebody that is doing instant execution, you will miss trades. Sometimes price will most likely to come to your entry, tap it, but it will not activate. Therefore, you've missed the trade, and the trade has gone. You can't start trying to chase the move or and start doing all of that, right? So missed entries are one of them. And another cons is that it requires a lot of patience. This is actually very, very important and very, very vital. A lot of traders, when they run out of patience, they start seeing what they are not supposed to see on the chart. So if you are using limit orders, you should understand that you are going to have to wait a whole lot of times. Price can come very close to your entry and then not tap it and move. Doesn't mean you should start going to chase the price, because sometimes it might come back again. So you just have, it's in your mind. So you just have to understand that using this, I have to wait, right? I have to wait. Not when you waited, you start changing bias midway. Probably you wanted to enter a long on gold, right? So and your orders have not triggered. So you are basically you basically run out of patience. And after running out of patience, guess what? You start chasing the movement and everything. So you have to be very, very patient. Another cons of it and limit orders is no confirmation entry. So this one too also depends on your trading model, right? If you have an entry model that maybe you wait for confirmation and the rest of them, using limit orders, you won't wait for confirmation anymore, because you just place the limit and left. Price will come there, do whatever he wants to do and the rest of them. So no confirmation entries. Unlike instant execution that you have to wait for price to come to your POI, tap and do whatever you always want to see before you go into the trade. So another cons of limit orders is that frustration build up. So by frustration build up, imagine price comes to your entry and taps on your MT5 but did not activate. Let's assume that happens to 2 to 3 or 4 of your trades. You start feeling left out. You start feeling that other traders, maybe you go on X, say other traders are making money and the rest of them, and I'm literally not even making any money here. So that's just frustration build up, and it's also in your mind, because if you truly understand that, okay, I'm using limit orders, so I have to be patient, right? You will just understand that these are one of the things that could happen when using limit orders, right? So you won't really try to overthink the whole situation. So those are most of the common pros and cons that I've been able to come up with for instant execution and limit orders. So to end the video, if you are to answer the question, the better option. So in my opinion, right, this is specifically in my opinion, there are no better option. There is no, you can't really say instant execution is bad or limit orders is bad, because market orders, instant execution rather, they're also useful for confirmation entries, fast entries and the rest of them. While limit orders, they are planned trades and the rest of them. So you just have to understand the both and know when to use them. So if you are a smart trader, you really would not rely on one of them, either limit orders or you really would not rely on one of them. Like, you would just try to understand them and know when to use them. So if this changed your mindset, or cleared a loophole in your mind, I'm glad that I could help. So do well to like, subscribe, and please share my channel. Right, so see you on the next one.